What if your customers could buy inventory worth thousands of dollars with just a few clicks and no upfront cash? Today I'm speaking with Stefan Scherpenborg, head of Nivoda Capital. Nivoda is a global B2B marketplace enabling jewelry retailers to source diamonds, gemstones, and jewelry worldwide. Stefan joined Nivoda with extensive banking and lending experience to build the embedded finance offering from the ground up. In our conversation, you will discover why traditional banks pulled away from jewelry financing, how Nivoda leverages transaction data for superior underwriting, and their unique buy now, grow faster philosophy that prioritizes customer growth over lending profits. Stefan also shares practical insights on building fintech products within marketplaces, the hybrid approach they took with compliance and decision engines, and why he believes embedded credit should be invisible at the checkout. My name is Lars Markel, and this is the Embedded Finance Review podcast. Every 2 weeks, I'm interviewing the builders and shapers of embedded finance. And a quick reminder, at Embedded Finance Review, I publish weekly newsletters, bi-weekly podcasts, and host in-person and virtual industry events. You can find all of them on my website, embeddedfinancereview.com. In addition, I also work with non-financial brands, infrastructure providers, and banks in understanding, designing, and launching their embedded finance products. If you are interested in working with me, visit my website and feel free to reach out. And now, let's dive in. Hi, Stefan. Welcome to the podcast. How are you doing today, and in what part of the world are you actually located right now?
Hi, Lars. Thank you very much for the invite. I'm very happy to be here in the podcast, and thanks for the invite. I'm in Amsterdam today. It's stormy. Summer has passed.
It feels like here in Berlin, the summer is just starting in September for a few weeks. That was about the summer.
Maybe I should go there then. In Amsterdam, it's all good. We're in the office today, but the weather outside is a bit more cloudy.
So it's even better to sit inside and talk about embedded finance. And first of all, I have to thank you because this might be a good chance for me in this podcast to learn quite a bit. We're obviously going to talk a lot about embedded finance here in this chat with you, with Stefan, with Nivoda, about embedded lending. But it's for a very particular industry. And maybe some people who know me a little bit better know that my wife, who's from India, her family is actually very, very deep into the jewelry business. So I'm really hoping to learn something about the industry in this podcast here. And maybe
for the next dinner, you'll bring some new info to the specialist.
Exactly. I'll try to impress my father-in-law. Maybe I can do that with some jewelry insights.
Yeah. So the funny thing is that I have a background in financing as well. And I started at Nivoda 1.5 years ago. So I was completely new to the industry as well. But hopefully I can share what I've learned in the last year and a half.
Perfect. And maybe to kick things off, we mentioned already jewelry and a few things, B2B marketplace, but maybe you can describe a little bit more for all the listeners out there to understand exactly what Nivoda offers in a bit more detail.
Yeah, of course. Happy to do so. So basically, Nivoda's mission is to make the global jewelry trade simple and accessible. And we really strive and aim to empower every jeweler, online brick and mortar, to help them grow. We're really their growth partners. So really empowering them with an all-in-one solution to run and grow their business. So it's basically multifaceted. We are the principal in the transaction. We're orchestrating the sale and the delivery of the goods. That is diamonds, gemstones, and also jewelry. And we help the jewelers to sell more efficiently, effectively by offering all the world's supply on their fingertips, by offering simple returns, by offering stone reservations for if there's a customer in the store but wants to think about it. We offer manufactured jewelry, search, and all of that combined with really the backbone of the jewelry store that they can actively trace their stones, arrange the shipping, and then they completely automated the invoice tracking. So it's really the backbone of the operating store, and with maybe even to phrase it a bit differently, with the overall objective that the owner of the business can just walk into the store every morning, can focus on the customer because it starts with the customer, and the rest is arranged by us. So that's really a very innovative business for the industry.
So if I were try to explain it in my words from like a potential example transaction, this might be a jewelry dealer here in Berlin, somebody who has like a brick and mortar store selling jewelry to clients over here. And this person obviously has to source somewhere the different items from them. Obviously, it's very much a fashion jewelry kind of like industry. So they have to source it from probably a lot of different places. And Nivoda is basically an online marketplace where a lot of the traders come together and in a way have a little bit of an e-commerce feeling for the owner of this brick and mortar store, where they basically can scroll through the platform, find the relevant stones, and then purchase them, and maybe obviously do it in a relevant size, not just like this one stone purchase, but basically get a lot of inventory that he or she needs for running the business in the next week or months or so. Is that like a typical transaction?
Yeah, I think you're about right. We start with the customer, which is the jeweler in any shape and form. And the traditional industry shifts away a bit from the traditional wholesale model, right? Where you go through your local wholesaler, which has created both challenges and opportunities. I think now also with the rise of their customers now having access, you also saw it with maybe the Taylor Swift engagement ring. I mean, with social media, I think the trends evolve rapidly. I think our customers are coming into the store with a clear idea of what they want and maybe also more bespoke pieces that they would like. And then at the same time, with the shift away from the traditional models, this creates opportunity for the jewelers as well as a challenge to source that diverse inventory right in an efficient way. And that's exactly where Nivoda steps in as the ultimate and the optimal fulfillment partner, because they only need to be onboarded once via Know Your Client procedure. Then they have access to the world supply, rearrange the payments, so no FX, rearrange the shipping. And since we ship in bulk, we are doing that more cost efficiently. So we basically saving time and money for them by sourcing through our platform and making it much easier. So let's say that 2 hours that they save on a specific ring that maybe needs 3-4 stones, they can spend on other customers in the store and thereby sell more.
And I guess also this opens up to source these products from a lot of different areas, right? I'm guessing like in the version, how the owner of brick and mortar store has done it before, it was probably mostly done through networks, through people that they know, potentially contacting them directly and like trying to see what they can arrange. Now they can potentially source their stones, their jewelry pieces from completely unknown parties in a very secure and trusted way, right? So basically sourcing a lot more possibility, a lot more products from a lot more merchants.
Yeah, 100% right. That's exactly it. And also then being less dependent on what's available with your local supplier. Through Nivoda, you can really till every detail select the specific stone you need. And we have over 2.5 million listings and now adding gemstones on top of that and adding jewelry as well on top of that. So we really can be your outsource partner, and the owner of the store or the business and the salespeople can just focus on selling more, and thereby we empower them. Yeah.
Very important questions to kick things off to understand what Nivoda exactly does. Obviously, this is not a jewelry podcast, but an embedded finance podcast. So let's maybe switch sides and go a little bit deeper into the embedded finance offering that you started. I mean, more specifically, it's an embedded lending offering that you built at Nivoda. Maybe you can walk us a little bit through let's say the historical development. How did the company arise at the moment come to the point where I thought we need a financing product for our customers?
Yeah, so I think if you go back, and I will make the bridge to the embedded financing, which we refer to as Nivoda Capital, that is the business arm of Nivoda focusing on embedded credit, is we want to serve our customers in the most brilliant expression of life, to keep it in jewelry industry words. And we do it through different ways, through the marketplace to sell, to virtual sales tools, through software, and through additional services, which embedded credit is one. Why? So they can better buy, sell more, and then buy more through us, which is also our business model, of course. Now, if you look back in time, I think this whole new way of working and the change from traditional models to new models has created a lot of opportunity, but also challenges, because now the sourcing becomes also an item, and also making bespoke pieces is very interesting. So what's happening is that if you want to offer a completely operating system to your customer, they also need a credit limit attached to it, right? Because it's typically valued goods, high valued goods. And if they want to sell more, they need a credit limit so they can order on credit while waiting for a full payment of the customer. Sometimes they want to make a bespoke piece to put into their showroom themselves, which can take up to 3 months to make. And all of this absorbs quite an amount of cash from a SMB, small, medium business jeweler. Buying expensive inventory, and let's say having longer lead times to deliver these pieces, these bespoke pieces to your customers, creates quite a capital constraint on your own cash flow of the business, while also having to pay rent and salaries. And that can really slow down your growth of a business. So, and at the same time, the financial industry has been pulling away, the traditional financiers have been pulling away in the last decade from the industry. Why? Because I think there has been multi-facets to it, which is all in the news, which I think we don't need to discuss. But we are really at Nivoda, we have a unique role to play, because we are at the heart of the transactions. We know our customers very well. We see the transactions. We know how they trade. So we can be fully integrated into that full service offering by offering them credit and thereby releasing also some of the capital constraints that they can have to, again, as an additional layer to empower them to sell more through us. So that's basically why we started it. So started really with the customer, and we feel we have a role to play because we're passionate about empowering the retailers, and we are passionate, and I myself personally am very passionate about credit and lending because I've worked in it my entire life. And we feel on the back of the marketplace, we can offer the right solutions for our customers to credit limit because we know them. And as I said, basically we're delivering the value on the back of, let's say, the overall service offering.
And I guess this is the typical storyline of a lot of like embedded finance providers, right? I mean, as you described right now, traditional banks might be find it too risky to work with these companies because why? Because they don't have the underlying data, the details about each transaction, exactly what you have. So the risk appetite is maybe not really much greater for you than for a bank. It's just that you have a lot better understanding and can do a lot better underwriting and understand these things. But maybe one thing just to clarify, Nivoda Capital, like what do you exactly offer? So if we're going back maybe to a practical example, what kind of like financing product do you exactly offer to the merchant?
So we just started, right? So I think we started a year ago with really the build out and, as I like to call it, the institutionalization of the offering. We want to be the embedded credit for the industry. Very simple words, payment terms under a credit limit. So if you would be a jewelry store, we of course would fully onboard you, KYC, assign then a credit limit, and under that credit limit you can start ordering through our marketplace up to that credit limit. And then of course you have live insights into your dashboard with the invoices, and you can pay invoices that will release limits. So it would be more of a revolver under your credit limit to keep on ordering. And typical payment terms we offer now are 30, 60 and 90 days. And what we want to build is really the financial infrastructure for the global diamond trade and jewelry trade to buy more without friction. So we really want to be the seamless credit option during the checkout, which is almost invisible because you can preset everything. So just click and check out to allow, let's say, the sale to happen fast and smooth for our customers. So that's what we're building. And we're building it out. There's a lot of opportunity, but this is where we start. Yeah.
It sounds a bit like the typical B2C experience that we all are looking for when we shop on our sofa or on our bed in the evening and maybe buy some gifts. We want to have it very convenient. And the same thing in the B2B environment, right? But again, like I said, I mean, the thing is not, I mean, it's not uncommon, right? Or not uncommon. It's like very common, right? That we're seeing certain developments on B2C side, and then we're getting used to as a consumer, and then obviously getting also more open in the B2B world. Like when we in the evenings do our shopping like this, and when we come back next day to the business and do our stuff, like why does it have to be like so different? Obviously, sometimes it has to be a little bit different, but expectation shifts, right? And understanding is like this should be a lot more easier. And I guess coming back to the example of the owner of a brick and mortar store, jewelry or anything else, time is limited as well. I mean, sometimes maybe very specialized items, sometimes it's very standardized items as well. Okay, I need them. Sometimes even the buyers are there, right? So, and it's about like, okay, they want to buy a lot. I don't have the money right now in the bank to buy it from my customers. Obviously, I know they will buy it from me in a week, 2 weeks, 3 weeks after I receive the product. So obviously a financing product makes so much sense because you can obviously increase a sale on your platform by quite a bit if you remove that cash constraints for people you typically know relatively well.
Exactly, spot on.
And then maybe to understand a little bit better, like how, maybe you can describe a little bit like how you would decide to build the product. I mean, we understand Nivoda Capital is like, let's say like a B2B buy now, pay later solution where your customers or the merchants can defer the payment. Is that a solution you partnered with somebody to build it? Is it something you built in-house? You spoke a little bit about your experience already and your background. So quite keen also from your point of view, what you think is the right approach for Nivoda.
Yeah, so in the embedded credit world, we like to refer to it as buy now, pay later. I would like to phrase it in our vision, buy now, grow faster, because we want to be the growth partner of our customers. So we just allow them to release the capital constraints so that they can grow faster. So that's why I rephrase it a bit.
Nice wording.
Yeah, thanks. So we decided to take a partnership approach to not build it from scratch in-house. I think our need was a right way to do the right data sourcing, to have the right decision workflow, right data storage and ability to report on the data, and data governance and compliance. So for us, the hybrid approach with a minimum amount of partners was ideal. Why? Because we have access to the right third-party data to make the right decisions, which is only a small part of it. We own and store our data ourselves. We keep control of that 100%. So that's basically the key thing. We control the data. And then also we get partnership approach from, let's say, compliance support, because but I'm sure, let's say, the key thing to scale it is to have this balanced approach from a compliance, that you really build a scalable fintech, right? That's always the thing. You can go fast, but you always have to think long-term while solving short-term matters as well. That's where the partner really stepped in, is the decision engine, making quick workflow changes while also making sure that our compliance remains on a high standard. And while also, let's say, slowly building out our own credit risk model and our IP development in-house. So I'm not saying that, let's say, we would always take the hybrid approach, but for now, and be able to have a scalable model, this really worked for us.
So as you describe it, I mean, obviously don't need to go into like exactly the name of the company you're working with, but it's not an approach where you work with like an all-in-one provider where you have like one company who enables you to do everything and you rely on all of this from this company. Basically, you have sourced different providers for different needs, for underwriting, for decision-making and all these kind of things. And then you have no need to build every little detail yourself, but obviously you still, as you said, have to have the control and flexibility to put them together the way you need them.
Yeah, exactly. So what we were looking for, that we had a decision flow that could adapt quickly in our development. Because look, if I look back more than a year ago, I think it's completely different where we stand today. And I think a solid fintech is built on a very strong compliance house, which is not the most sexiest, of course, but it's really what you need and the best team. Because in the end, you can automate what you want, but you need a team that's on their feet and really knows what they're doing. So that's why we took the minimum partnership, I call it hybrid approach, yeah. And so we outsourced basically the decision engine, the compliance tracking as well on that decision engine to make swift changes and to adapt to our development of our team and our capabilities. But we do a lot of orchestration indeed in-house, and we have because we're a tech company ourselves, we have a lot of capabilities in-house as well to optimize that and work towards, let's say, also automated limit setting, etc. in the future.
Understood. And we spoke about already, or you mentioned as well, your background in credit and lending, extensively experience. So maybe you can describe to us, like when you joined Nivoda and then maybe you didn't have touching points with the jewelry industry before. Was there something about building Nivoda Capital that was completely different to credit products you have built in the past? Or was it more like, yeah, okay, I know how it works. I have to make just a few tweaks here and there to adjust it to the case?
Really nice question, by the way. Because in the end, I've worked in banking. I've worked at ABN AMRO in the past, and they had, of course, also, I think more before I started actually, also a large jewelry department. They were one of the biggest banks in that industry in the past. But broadly speaking, look, if you call it buy now, pay later, if you call it lending or a revolver or credit, I think it's all a front end thing, right? In the end, it's about underwriting a business or a customer and assessing the creditworthiness properly. And then it doesn't really matter what kind of product you put onto it, because in the end, it's about repayment. So it all drills down, bottom line, to a proper credit model that is working and reliable, and about the customer experience around taking that product from you. And that is what I've been focusing on. And that's what really attracted me in this role, to be a true marketplace where it's all about the customer experience. Whereas in the past, I was working from a financier. And if you like it or not, banks like to tell they start with the customer, but in the end, they start with their own regulatory requirements and work backwards from there. So now I had the opportunity to build a fintech product in a truly customer-centric environment, which is really awesome, because there you can bring your credit and risk expertise and integrate it with, and the nice challenge there is to combine that with the best customer experience. And we're still building it out. We're not there yet, but every day we spend most of our efforts to optimize that balance, yes.
And would you say, I mean, without going into specifics, but would you say like building an underwriting model for the jewelry industry, for merchants in the jewelry industry, is more complicated than in other industry? I mean, without being an expert in the industry, but obviously very high. We spoke about B2B transaction in jewelry industry. It's not just like one stone, it can be quite big. So I'm not sure what the average ticket size is, but I guess could be easily in the 50,000 or something like this. So is it more complicated, would you say? Or is it, you would say like, yeah, okay, it's a little different, but it's not like completely different to what I think I've done before?
No, I think you're sort of right. To begin with, the average order values are typically quite a bit lower. So it's not that so I think we have a long tail end of customers. I think Nivoda itself already has over 10,000 customers who have become a member or let's say customer on the platform. Yes, we are a specialized credit provider. Yes, the challenge is that you have a lot of smaller jewelry businesses. So typically less access to public data as you would have, for example, with listed companies. But that's also why I think, and that's also why, let's say, I think we have a role to play because we own the data. We know the customers very well. Let's say a third party independent credit provider wouldn't, let's say, just would be go off the back of public data, which is difficult to find on these businesses. So you have to do on a case by case basis, really much deeper assessment or customer conversations or retrieving directly data, which we already have because it's a customer of ours. They trade on our platform. We have the data. We do our KYC. We know their payment behavior. That allows us to be much more efficient, but also we can apply the right credit metrics to that specific customer. And thereby, maybe we could support them a bit better than an independent third party could. So our partnership approach to them really helps in that sense. Hopefully that answers the questions.
For sure. And I have two more questions that build up on top of each other. Maybe like the first question would be like, do you push your customers, let's say your normal Nivoda customers, to use the Nivoda Capital product? And what I mean by that is, obviously in the marketplace, I remember doing a podcast with Anina from Volt, the restaurant platform, who also offers a Volt Capital product. I'm going to paraphrase her right now because I haven't listened to a podcast recently, but if I remember correctly, when I asked her the question, how do you define success about the Volt Capital product? She said like, look, to be honest, I don't really care if restaurant owners are using Volt Capital or not. What I care about is that financial or cash flow restraints shouldn't be the reason not to grow. So basically, the Volt Capital product is not so much maybe aiming at money from the lending business itself. What it's really focused on is that the restaurant should have enough cash flow to build and grow their products, right? So the focus is not so much about the embedded finance product, but more about embedded finance or the lending product should help to increase the sale on the core product. So coming back to my question, how is that in the Nivoda world?
I would say drop the mic because that's exactly it. She has been spot on. Yeah, no, really, that's it. I don't need to push customers to use credit. It's indeed exactly what you're saying.
And is that also, like with your background, obviously joining Nivoda, coming to the company, like building such a product, was it like, I don't know, new for you or like big change for you to have this kind of mindset, or did it not really affect anything of what you were doing?
No, it did. I started as head of corporate finance. So it was basically a part of my role because I had a lot of background in raising and structuring debt and etc. But this project, if you will, grew so substantially that it became my dedicated role. And of course, it is a great opportunity for me. And that's also what Nivoda stands for, right? If you have an idea, you can build it and really be entrepreneurial. That's really supported within Nivoda, which is really awesome. So I got the opportunity to build Nivoda Capital, really as a fintech institution within Nivoda. And now with the vision to be, let's say, building the financial industry infrastructure for the industry. So that's really cool, but also challenging. And with my background, of course, coming from banking and consultancy, I cannot claim that I have the entrepreneurial experience, but I've seen a lot in my career. And I think it's also about the right mentality, roll up your sleeves and doing it. Because let's say day in, day out, I'm boots on the ground, roll up my sleeves and being operationally very engaged, while also having to switch to strategic thinking, long-term thinking, making strategy papers, etc., etc. So it's for me constantly switching between being operationally involved and taking a step back or level up to also keep the strategic roadmap in clear line of sight. And that makes it also very interesting and sometimes a bit challenging, but it's overall very fun.
And in terms of, like you said, I think Nivoda Capital was launched last year. How would you describe, is it at the moment, like, are you offering the final product, so to say? Like, is the work from Nivoda Capital like mostly done and you're just growing it now? Or do you still see like there are a lot of potential to even grow Nivoda Capital, even let's say like to even bigger instrument for the company?
Yeah, there's a lot to say here. A really interesting question. We're definitely not done. We're just getting started. I always see it, let's say, for the short to medium term in 3 horizons. Let's say the first one was really, and it's all linked to transaction value of the throughput of transaction value through Nivoda, right? Nivoda Capital. And horizon 1 is really making sure that we are set up for scale and that we have a stable core performance, right? We really need to make sure that what we're doing it right. Then the second one was really partner up with an external partner, institutional lender, which we have done now. Really get the data infrastructure spot on to make sure that we can build on the back of that, the credit model, and making sure the unit economics work. And that's the phase where we're in right now. And then the second phase is really going into the revenue optimization, the velocity, the credit efficiency, and then dominant geo expansion. And really becoming, because the beauty of our marketplace is we're global. We're not restricted to any country. So, and then really selected growth sustainably, that's a huge opportunity. And that's only from volume perspective and from a credit revenue perspective, if you will. Then I think putting that aside and you really focus on the product side of things, I think there's a lot to win in the core capabilities, really our best-in-class credit model for a specialized industry, which you can maybe also leverage into other specialized industries. I think there's a lot of possibilities and opportunities in inventory management solutions, virtual walleting, revenue-based credit, et cetera, et cetera. There's so much else to explore that we're just getting started, I hope.
Stefan and his team are not done yet. And maybe coming to your team, obviously you described how you came to Nivoda. First, maybe not to like focus on building Nivoda Capital, but on the corporate finance role, which has then evolved. Can you describe what is the role of Nivoda Capital today within the company? I mean, obviously your core product is really the marketplace, and I guess the definition of the company is not really a fintech company, it's a marketplace. But like, do you think the company has some kind of like fintech lending DNA?
It's growing. I think it's a very important part of what we're doing in the checkout and in the order section, if you will, from the offering that we have. It's really a service that we offer. I mean, as Nivoda, we are really serving them in the best and most brilliant way we can. And that is with the marketplace, but also we're offering virtual sales via Feeds, Shopify, Showroom, media services. We offer software services, ring builders, etc. We offer now all kinds of categories from diamonds, gemstones, to jewelry. So I would see myself as an important but smaller piece of the puzzle. And together we're really becoming and growing into the backbone of the industry, really the partner. Yeah.
Do you then sometimes in your, maybe in the beginning of the days, did you have to be like a little bit of an evangelist for this topic and kind of go around in the company? And maybe C-level wars, or the founders were like quite quickly on this topic because they might have understood the problems from the merchants like quite fast, and maybe have seen that even before, that something like this makes sense. But in the overall organization, is that something where you had to go around and pitch this idea and make sure people are aligned and understand why you're doing it? Or
I would say no. I think from C-suite down into the organization, there's a very solid understanding and support to drive this business line, which I've also experienced over the last year that we've been building it out. There is a thorough understanding of the need for credit for the industry to help our clients or customers grow faster. So all I can say is huge support. We're integrated in this. I mean, from tech, engineers, product side, and also commercial side, I think a deeper incorporation. Also from a sales, I mean, our sales organization is an absolute rocket ship. They sell a beautiful product with a lot of categories, right? So they have a lot to bring to the table. And also then for salespeople, capital and offering credit is not per se the first thing.
of course not.
Right. And I see within the entire organization that we are really getting into it, and a steep learning curve also to support our customers when it comes to credit, our credit offering. So I'm really happy with that. Yeah.
I guess from my perspective, you said, right, the customer doesn't really come for the credit product. Nobody would come to Nivoda for the credit product. They obviously come for something else, but then the credit product might be the reason why they maybe even fall in love with the product even more, because it takes off one more constraint they maybe didn't even consider in the first place when choosing Nivoda.
Yeah, exactly. They primarily, of course, come for the supply chain procurement side to let that disappear to do background, and they can focus more on the customers and thereby also getting the tools to sell more. And this is then the service we add to that. Yeah.
Of course. Stefan, maybe final question. Obviously, as you said, like you had a very long background in credit. I think if I'm not mistaken, like Nivoda was the first job you took on, like outside of the financial service ecosystem, going somewhere else and building these kind of products. Maybe is there something you've learned about that while stepping out of the financial service bubble and building financial services at a marketplace? Or maybe to rephrase it, if there's somebody, a listener out there who is in a completely different B2B marketplace and maybe also considering to pitch the idea of like a capital product within there, is there some kind of advice you can give for some learnings from your side that could be helpful?
I would just say, if you believe in something, go for it. No one's going to do it for you. So just go for it. Create a clear scope of what you want to build and why it's going to work. It's not going to, you have to convince maybe some people. I had to look that people were already convinced, but I would just say, go for it. Why wait? Don't think back when you're 65 or anything, and that you have to think, if I only did that or this, just go for it. And then at least you had a great opportunity to build something. And I think that's the most beautiful thing about working at a tech scale-up, or any scale-up, if you will, is that you really have the ability to have impact and to build something. And I think that's the coolest thing you can do.
Perfect. Thanks for the insight, Stefan. As I said, this was like two personal topics from my side coming together.
That's really cool.
Finance and jewelry. So I'll definitely take something away, and I'll see. Hopefully I can impress my father-in-law at the next dinner.
Let me know how that went. I'm keen to learn.
For sure, we'll do that. Stefan, if there's anybody out there who wants to maybe learn a little bit more about Nivoda or what your team does, is there any way to get in touch with you?
Yeah, just add me on LinkedIn or drop me a note via LinkedIn, and then...
Perfect. I'll link your profile in the show notes. So check that out if you're interested to learn more. And yeah, until next time, Stefan.
Thank you so much.
Thank you for listening. If you like this episode, make sure to follow my podcast and subscribe to my newsletter. And I would highly appreciate if you can give me a 5-star rating in your podcasting app. Thank you. And until next time.